Alrighty, folks, we just talked about housing prices. Now we are going to talk about housing inventory, active listings, new listings, everything housing with the one and only Lance Lambert. How you doing, sir?
Doing great. Housing, housing, housing. Always a lot going on.
Yeah, so we talked about interest rates potentially falling sub six. In video one, we talked about video number two, we talked about price. Now let's talk about inventory. I believe, and I think Fortune actually put this out, inventory will be the number one issue in 2023. I don't think it's coming as much as many people think. So, yeah, let's get into it. What do you got for inventory?
Yahoo that put that out. But
Oh, Yahoo.
yes.
I
Um,
read a
I,
lot, so I don't know who it
I
is all
will
the time.
share my screen. Let's see here. So we just got this data this morning.
Okay.
And actually, it's not downloading from the data page. So nobody really has this except the one rental audience right now. So this is new listings. I should have started off active listings inventory. But what we saw last month is a 12% increase in new listings, but still down 20% year over year. Here's where April was last year,
Wow.
497,000, and right now 392,000 coming on the market. The uptick was actually pretty good for March to April.
Okay. Yep.
The thing to keep in mind though is new listings can go up, and it doesn't necessarily mean the market's cooling, because if the move up buyer's like, F it, I got to move on with my life,
Right.
sell their home, they're also buying something new. So new listings were a little bit of a harder thing to read and a little more nuanced this cycle, because the second half of the year, which was the coldest part for housing, new listings were pulling off the trend considerably because the move up buyer was moving off. But as they moved off, that also meant fewer buyers too, because they weren't buying then. So it works both ways. We can actually see new listings, if rates went down quite a bit, move up a decent amount as the move up buyer back on. But it doesn't necessarily, the market then could still be could appreciate even more because rates have went down. It went down so much.
Yep.
So I don't view new listings as I put them a little lower on what I care about the most. What I care about the most is active listings, because active listings are really the barometer, which kind of measures supply and demand. So right now we've seen new listings move up 12% month over month, but active listings only went up 0.18, so 1/5%. So we did bottom. We went up 1/5 of 1%. But we only went up 1/5 of 1%. So even though new listings went up more than a normal March to April, it didn't matter, because it's getting absorbed. And I don't know what that probably tells us is days on market must have went down again between
it
March.
has to. It has to. Yeah.
And so I guess it's good that we have some type of bottom here. But it's the idea that inventory was going to get back to these blue lines. It doesn't seem.
What was 2019, if I might ask? That blue line there. There you go.
Yeah.
So 1.1. So double. Oh yeah, almost exactly double.
Yeah. And I mean, what happened is the pandemic starts here, and there's just an acceleration in household formation, a decoupling of people living together because they're like, I got to work from home. I'm not living with you. A lot of these people who were in cities like New York, Los Angeles, San Francisco, Seattle, who were kind of getting closer to they were kind of well into their careers, but they weren't going to buy there really. And they were like, you know what, I'm moving elsewhere. And there was a lot of freedom created by the pandemic and work from home. And historically, a housing market is really just a regional job market, a metropolitan area, commuting distance to that. That got broken during the pandemic. And suddenly, New York's housing market, my employer Fortune is in New York. And now I'm buying in Cincinnati. I bought in Cincinnati in summer 2020. So just the local job market spread across the country.
Right.
And that shift here, you know, it's just such an accelerant on demand that it's hard to, I don't know how you catch up there really. You know,
No.
to be honest, because we did see a fairly speedy move up in 2022 as mortgage rates went up
Yep.
went up so high.
Yep.
But the market came down a little bit in price and got back into equilibrium.
Yeah.
So what would have normally happened in housing is last year, that mortgage rate shock, people would have been more resistant to cut prices and inventory would have built, right? More.
Mhm.
But people kind of gave early because they were a little afraid. There was a little bit of fear in the market because they're like, oh, I've seen this movie before.
Yeah, exactly. Yeah.
So there was like, it wasn't enough to like bring down prices a lot, but it was enough to like move them down enough and it put the market right back into this equilibrium. So I, you know, it's hard to see how you get back to anything like this.
Yeah.
What
I
are
mean,
your thoughts?
no, I think you're absolutely right. I mean, for me, new listings is it actually tells me, for me, the new listings is my move up buyer barometer, because I think we kind of found the floor with just lifestyle changes like death, divorce, job transfer. That stuff always happens. But if we ever saw a spike in new listings, I'm talking 5-10% month on month, that tells me something may have happened with the move up buyer. And right now, unfortunately, the most likely culprit that would do that is rates crashing.
Yeah, but it's not like that's going to cool the market at all. That would
Oh, it's going to be the
new listings can
reverse.
move up very high, and the market
Yeah,
could even get much hotter.
exactly.
Yeah,
Yeah, so that's what I use for my new listings. It's wild to think it's down 20% year on year, but active inventory is probably the most important, as you said. And it really goes to my call that we're going to do like 4 million transactions. So we're not doing 6.5 or 7. And then probably the most important thing with all of this is that blip we had in February for pending home sales or existing home sales being up 14.5%. That's not going to be repeated. It was basically left over from December and November and December being so cold. I think new home builders have just almost all the power now. They can throttle demand, they can play with interest rates. And I think new home builders are, if they're not trading an all-time high, they're probably pretty close to it.
yeah, and you know you know there was those people that were shorting builders last
I
fall,
know.
and it's
Some of the
and
crash pros were really liking shorting home builders. I hope they closed.
you know to buy a stock. Well, one of the things I like to do when people tell me they buy a stock, I usually like to ask them who the CEO is.
Ah,
Uh, because
yeah.
that gives you an indication. It's like you at least got to know who the CEO is, and that's to buy a stock. To short a stock where there's like the limit on the losses,
Oh,
you know, it's huge. You really have to know your stuff, and you know there are companies in real estate that are in trouble,
oh, no
right?
question.
And a lot, you know, especially some of these mortgage companies, and you look at some of the commercial side, and I mean, you look at Open Door. I mean, they're still at a
Yeah,
dollar.
yeah,
Uh, but to go after the builders who are the ones who would be the best position to
exactly.
increase affordability because they had huge margins,
Mhm.
biggest margins ever. And so
Yep,
they just, well, we'll just come down a little bit on margins and we'll do what we got to do based on the community to get these homes
yeah,
selling. And they went and met the market, and there's no competitors. The
nope.
existing market doesn't, I mean, it kind of exists, but you know, there's not a lot to it.
No,
Uh,
there's not.
and yeah, so, and the other thing the builders can do is I talked to a builder in Columbus. What they've done is they're just shifting to more townhomes. Uh,
Exactly. They're going to go to
affordability.
the price point. The builders that move to the first time entry level home are going to freaking dominate. Just dominate the market that they're in.
Yeah. So this line, I just don't know how you like. It'd be interesting to see where it's at in 2 years. Like, what's the new? Where are we going to hang out?
Two
Uh,
years. Wow, that's interesting.
Yeah, yeah, you know, I mean, yeah, I'm kind of thinking ahead on the inventory because I mean, I mean, how
I
do
don't
you
know.
get up? How do you,
I don't think you can. I don't.
I, because
I
let's
think
say, like, let's say tomorrow mortgage rates went up to 7.5% or eight
okay,
percent,
sure,
right? Days on market would go up
no
through the
question.
second year. We
Days on
probably
market
would
would
beat
explode.
last year. But
Yep.
what would happen is I think prices would just come down another couple percent
Yeah.
and the market would go right back into equilibrium. Like I just can't see and
Until
it
the move up buyer unlocks, which to me is multiple life events. Um, that's years away. That's 5, 6, 7 years away. Not 2, in my opinion.
yeah. I mean, I guess the other thing is like depending on what the economy does, but
Well,
you know,
let's play that out. Let's play that out. Let's say unemployment doubles. Let's just spitball this together. So we go from 3.6 to 7.2. I think that's roughly 3 million more unemployed. Roughly, that's about it. Maybe it's 3.6. I think it's 1.2 million people per percentage point. So 3.6 million people are now unemployed. Math says about half of them are renters and half of them are homeowners. That's just what the math says. So now we go from 3.6 to 1.8 homeowners. How many of those homeowners um, have low mortgage rates, own it free and clear? I think we both know that 40% of homeowners own their homes free and clear. I mean, you back out of that 1.6 number to almost inconsequential. And then the most important thing, Lance,
yeah,
is if we go to 7.2% unemployment, how quick do you think the banks are going to bring back forbearance with a click of a mouse?
yeah. Well,
They don't
so
want them.
I think it's the scenario of like building inventory in a bad economy would be like the employment breaks,
Right.
but affordability stays pressurized because the yields don't close fast enough because the 10-year
Right.
would go down,
Sure.
right? Like it would be hard to see. And so like that pressurized affordability, a speedy shift in the economy that's enough to break confidence,
Okay.
then maybe it's like, okay, days on market starts to like normalize more. And so the days on market is what would have to do the heavy lifting here.
Totally agree. It's days on market. I agree. It's
Yes.
not these numbers.
It's
Yes.
not like you're breaking these people with the 3% mortgage rates who
Nope.
are like, I'm scared. I'm going to sell my home now. I don't think
Correct.
it's, I think to normalize inventory active listings, it would, I mean, that's the only way we moved up last year, was
Correct.
days on market. And that's like what, one of two times in 10 years that inventory moved up for a
Mm-hmm.
year.
Mm-hmm.
And it was only because days on market.
Yep. You're right.
And because there was no days on market.
Exactly. Yeah.
In spring 2022.
Yeah.
Um, so I don't know. So maybe active listings could could I don't know. It's just this line right here, like these few months, that's
That's the spring selling season. Oh, it's pretty
it's
wild.
interesting how it's so much later now. Like look
Yep.
at these three dots, 2021, like these ones, and then look at
Yeah.
these ones.
Yep.
Like right there. It's just later now. You know, I do have a theory here.
Mm.
I think that one thing that's happened is that markets in the South and like Southwest have become a higher percentage of inventory.
Oh, yeah, it
In
could be.
those markets, I believe uh, uh, bottom later or bottom at a different time of the year. So I
I think
think some of the
yeah, I
timing
think
is
there's something
different with the
there.
bottoms.
Yeah,
Um,
you're right.
I don't know.
I think I think that's a
It's
nice
like
catch.
Boston bottoms very early, and it has already bottomed.
Mm.
Um, I don't know, but right now, active listings month over month up 0.18%, so one fifth of one,
0.18.
and then new listings up 12%, but still down almost 21% year over year.
Very cool. Well, Lance, I think it's amazing you come back every week to have these discussions. Housing, housing, housing. Where can they find your articles, and what is your Twitter handle?
Yeah, they can find me at News Lambert, or they can Google Lance Lambert Fortune.
Thank you, buddy.